Hey, good afternoon, New World News. Today is Monday, June 13th, 2022. It's later in the afternoon, and today has been a brutal collapse of the U.S. and global economy, for that matter. The Dow Jones and the S&P 500 have both tanked today. The Dow Jones, last I looked, down almost 1,000 points. The S&P into what they're calling now a bear market, which is staggering. That's when recession is coming. Crypto has tanked. Bitcoin, last I looked, down over 12 or 13% just today. I'll go over and take you to the screen and look at what the current numbers are right now. Also, Celsius, if you don't know what Celsius is, wow, what a job for them to completely just go belly up overnight. They ceased all trading and withdrawals. They were not allowing customers overnight to withdraw or trade on the market, and that turned people into raging monsters on Twitter. I'm going to do a whole separate video just about the Celsius story, but that just adding fuel to the fire, just everything going wrong. And I don't care what political affiliation you are. It's been 18 months since Joe Biden was elected president. So November of 2020 to November of 2021 was 12 months. And then December, January, February, March, April, May. So we're now in June. So 6 and 12 is 18, almost 19 months since he was elected president. And about 16 months since he took over. You can't blame this on the last guy. This is all on what we have going on right now. And not everything is the administration's fault, but a lot of it is, and they are certainly not doing anything to help it. Here's the thing. People ask, if Donald Trump was still in office, would this be happening? And we don't know. We can't prove that. We have no way to say for sure what would or would not have happened if he was still reelected president. But what we can say for 1,000% certain is that it is what's happening right now under Biden. Guaranteed, we know, because look around. Gas about to go to $6. My mortgage broker friends and mortgage lender friends who are in that business told us today they got notices that the interest rates are going to go into the sixes, possibly climb to 7%. I closed on this house just a year ago. I've been here 1 year and 1 month in 2 days. I'll be here 13 months in 2 days, and I have a 2.875% interest rate. 2.875 1 year ago. 2.875. Let that sink in. That's historic numbers. People were getting 2.5s, 2.25s, 2.4s, getting an interest rate in the 2% on a house is unheard of up until that, right? And then even when people were getting 3s and 3.25s, it was like, okay, that's a decent rate. People are now getting 5.5%, 6% a year later and higher. So the entire global economy just absolutely tanking. What I want to do is take you over here and show you some of the staggering numbers from today. And as always, mostly what I am worried about here is your comments in the comment section below. I'm going to go through and respond to a bunch of comments on my last videos and on this one today and tonight. It is just absolutely mind-blowing to me what is happening to this country in the matter of 6 to 12 months. And even more terrifying and scary, what could happen in the next 6 to 12 months between now and the first of the year. That's July, August, September, October, November, December, fourth quarter. What's going to happen? How are you planning on doing? Are you going to save money? Are you going to try to sell as much as you can and stash away the cash? Are you going to invest? Are you buying these dips, these drops? Because I don't think they're dips. They stop being dips when they go, a dip is this, not this. We're crashing. Things are not going to get better before they get worse. Exactly the opposite. They're going to get worse before they get better. I don't think the stock market or the crypto market is done collapsing. I think the bottom is still way down there, and sadly, the lower it all goes, the more we're all going to pay for it. So let me know how you're going to handle this and what your plan is for the next 3, 6, 9 months to save cash and make it through this problem and into what is most likely going to be a recession here in the United States of America. And if you're overseas, then by all means, let me know how things are going in your country. I'd love to hear about it down in the comment section as well. And let's go over, take a look at the numbers, and then I'll come back and read the comments in just a couple of hours. Okay, so we're on CNBC because this is probably the best place to get everything all in one place. GM stock closes below its IPO price for the first time since October of 2020, almost 2 years ago. GM in a low. JP Morgan's trading guru Kalanovich says the market will recover losses to finish the year flat. He's betting on that coming back by the end of the year. I doubt it. The 1980s era rate hikes will create more market turmoil. So one of the big stories here is that the Fed is likely to boost interest rates by 3/4 of a point this week after the S&P 500 closed in an official bear market. So that means that if you're used to getting a 4% interest rate on your house, it's going to go up to 4.75, which could be the difference in some people's mortgages being $100, $150, $200 more per month. If we go over to the U.S. markets for the day, we can see the Dow Jones closed 876 points down, nearly under 30,000, which has been a long time since we've been under there, 2.79% down. The NASDAQ closing at 10.8, 530 points down, 4.68%, and the S&P 500 now down to 3,700, below the 3,800 that we were at the last time it dropped like that, 151 points, 3.88%. Gold and oil both down as well. So you can see here that everything just going down, 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 over and over and over again. If you click on the interest rate, federal policymakers are ending the idea of a 75 basis point rate increase this week. Bond yields pointed to the possibility of a more aggressive Fed as the yield on the 10-year Treasury shot up to 3.37%. Markets are beginning to anticipate an even faster pace of interest rate hikes, and the Federal Reserve officials apparently are contemplating the possibility as well. This is just going to drive us quicker into a interest rate hike and a recession. It's ridiculous. I mean, I can't even imagine this, but Friday's consumer price index reported showed headline inflation in May running at an 8.6% pace of inflation. New York Fed release Monday indicated that one-year inflation expectations are at 6.6%, tied for a record in the data series that goes back to 2012, just after our last crash of 08-09 into 010 before we started recovering. But we have beat that. We're at an 8.6% pace, 2% above 6.6. This is crazy, crazy bad for this economy. That means it's just going to get worse. And I hate to be the doom and gloom, but I'd love to hear your comments and your opinions about it down below. With that said, I'm just going to leave it to you guys because there's really not much more to show, not much else to say about this, just that everything is completely jacked up. So there it is. There's the economy in a quick little video, and hopefully you enjoyed this video. Don't shoot the messenger, and I'll look for you guys in the comments. Make sure you hit that like button. Make sure you are subscribed because I have a ton of videos coming for you. I can't wait to put them out, and I'll see everyone next time.